Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will record financial transactions related to the owner depositing money into the business as well as taking a loan out for the business within QuickBooks Online. Here we will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. We are on the dashboard for QuickBooks Online. We're continuing with the Get Great Guitars problem. If you've been working along with us, that's great. If not, that's okay. We're going to be entering deposits into the register for the owner putting deposit into the company and for a loan to the company. There's a few different ways we can record a deposit. We're going to record this using the check register. So we're going to go through the check register. Now when you go to the left side here to choose the check register, you might be thinking to go to the banking, but we're actually going to go down here to the accounts and select the accounts. And that'll give us the chart of accounts. So if we select the top item here, which will be the chart of accounts, then we can go into each account. And this is where we can really find a register for any of the accounts. Now, typically we are used to having a register for the checking account, and it'll look similar to having a register that we might see with our checkbook and enter the transaction in a similar type of format. So if we click just anywhere on the checking account or select the register over here, we will go into the checking account register. Here is the checking account register. We don't have much activity. It's a new company here. The only activity we have so far is the first beginning balance, which had the $25,000 that went into the opening balance equity. So now we're going to enter another deposit. We're going to say that the owner is going to deposit $65,000 into the company. So we have another deposit going into the company. In order to enter a transaction, it's a little bit different than the on-ground. We have to select this drop-down, and we could select the different types of items that would be happening to enter directly here. Now, in this case, we're going to have some form of deposit. So we're going to go up here and say we're going to deposit because the owner's putting money into the account. This then is the checking account, and therefore where we will deposit this information. We're going to put the date as of 01/10/21. We're going to be working in 2021, the year, starting January is the first month we're going to be working in. And then I'm not going to put the payee. I'm going to put the memo, which would be owner deposit, so that we know it's from the owner. It's going to be a deposit. Notice I'm tabbing through this. When I tabbed through it, went straight to the deposit screen. That's going to be the $65,000. That's the amount the owner will be depositing. Tab. And then we're going to go through the accounts. We could select the drop down for the accounts. And note that it jumps to the expenses here as kind of a default. We want to have the owner putting the money in. So we're really looking for an equity account. We'd like to have some type of equity. We could see the equity accounts over here. And the chart of accounts that was generated when created in this company actually has an equity account that breaks out the owner investments. So owner investments, here's what we're going to select. If it didn't, we could put it into retained earnings. It's going to be where everything's going to roll over to at the end of the month. We're going to select the owner investment here. And then we're going to say save this transaction. Transaction is now saved, so we have the two items down here. If we scroll a little bit to the right, we see our items and our running balance here to have the $90,000, which would be the 25 starting and the 65 here. We're going to record another deposit, and that's going to be from a loan. So we're going to say we got a loan from the bank, another deposit transaction, same screen. We're going to scroll over. We're going to say it's from Chase Bank. I'm going to select tab. As we set this up, when I select tab, it does ask if we want to set it up as a customer or a vendor or an employee. Of those three choices, I'm going to choose customer here and then enter this information, although it's not exactly a customer because, of course, it's a loan payment, but we're going to keep that there. We're going to have the memo. We could put some here like it's a loan, and we're going to tab. It's going to be the payment deposit then, and that's going to be, for this one, will be $50,000. Tab, And then we're going to have the account. And if we select the drop down, it defaults to those expenses again. We're kind of looking for a liability here. We want to have a loan. So we see here we have a loan payable that is in the books when the chart of accounts was created by QuickBooks as we set the company up. So we're going to select that item. Here's what the deposit will then look like. And we're going to say save that. So if we think about these two transactions, what happened here on this first one is that the checking account went up and the other side went to the equity account in owner's investment. This one, the loan, that means that the checking account went up and the other side went to the loan payable that also went up for the liability. We've got the $140,000 now in the balance, seen here and there. Let's go to the reports. Let's take a look at the balance sheet and see if we can see that same $140,000 in the balance sheet. So we're going to go to the reports on the left-hand side. And let's just type in to the balance sheet. So balance sheet up top. And we're going to change the dates for the month of January. So 01/01/21 to 01/31/21. So we're going to do the month of January for the year 2021, the year we're working this problem for. Then we're going to run this report, run that report. And there it is. So there's the 140,000. If we select that 140,000, then we're going to see the detail. We started at 25,000. That happened the date right before this because that was the beginning balance before the year that we are starting transactions in. And then we have the deposit 65 and the deposit 450. If we select either one of these, we'll go to the deposit screen and we'll see this item here, and here is the deposit amount. The screen looks a little bit different because this is the deposit screen. We were in the register, and so this would be this is the deposit that is generated whenever we make a deposit, the form that will be driving any deposit. Closing that back out. Going back to the original report, the balance sheet. Then we're going to scroll down. There's the 140. Let's see the other side of these transactions. We have the liability down here, and that was it's going to be within this 72,000. So if we select that item, then we're going to see that we started with 22 at the beginning balance, and now we had the 50, bringing us to the 72. Selecting the 50, we will then see once again a deposit. So there's the deposit in the checking account. Closing this back out with the X. Check the one other account affected. Scrolling back up to the top. We want to go back to our report summary. And that'll be the balance sheet report summary. And here's our equity section. It might be a little bit different than what we've been used to before in that we have this investment account. And it's useful to break out the investments. Sometimes they're not always broken out. But here we have the investment broken out to the retained earnings and then the net income. The total equity, in essence, you can think of the total equity as all the same type of thing that could be broken out in different formats. The opening balance is something we're probably going to want to have to adjust for. But the owner investment is something that will be there, and then we'll close out to retained earnings. So selecting that, then of course we see our deposit once again. Scrolling back up to the top, going back to the balance sheet. There's our information here. And note if you're seeing that the opening balance is closed out to retained earnings, that's probably good because we do need to adjust for that. That opening balance is not exactly proper. If we have that closed out to retained earnings, that would look more proper. That is a remnants of us putting in those beginning balances at the start of the company. Hello, in this presentation we will record what is oftentimes one of the first couple transactions that will happen within a new company. We will record these transactions into QuickBooks Pro 2018, those being the record of a deposit from the owner and a deposit from a loan taken out to fund the startup of the business. If you've been working with us, we're going to continue on with the Get Great Guitars problem. If you have not been working with us, that is okay. We can still see how to record the original deposit from an owner and loan within to a new business. What we've done so far is we've set up the Get Guitars business, We have a new company file. We put in the beginning balances, the beginning accounts, and the beginning balances within those accounts. Set up a couple vendors, set up a couple customers, and we are now going to actually start recording the transactions. We're going to record all these transactions as of the first date of 2021. So we're starting a date that's not going to be of the current date. That's by design when we work problems such as these. So we've done everything in order to start things up, and now we're actually going to be entering these transactions. This is typically going to be the first type of transaction, oftentimes with a startup type of company. And therefore, we're going to enter the deposits. A couple ways we could enter deposits. We could go to record deposits here, but oftentimes the first deposit, I like to go to the check register. So we will then go to the check register in order to enter these deposits. That's going to be located in the banking drop-down. And we're going to go down to use register, banking, and then use register. And this is going to look familiar. We're going to have a drop down here. It should default to the checking account, whatever your checking account is. If you select the drop down, you can see you have all the accounts, and we can actually open the register for just about any account, if not all accounts. But typically we want to open the check register, oftentimes being the most useful. And I'm going to open that. We're going to say OK. The check register should look familiar in that it looks pretty much like a checkbook, and that's the nice thing about it, and is also the reason why QuickBooks tries to make a lot of the other accounts have a register that looks similar. But when working with the registers, it's usually better or easiest to work within the check register and then record anything to any other account in the other account. So how this is going to work then is we're going to have the date. We're going to put the payee here or the customer, and then we have the payment, and then we have the deposit. We do need to name another account here. So note that that's kind of the thing that's a bit different than possibly a checkbook. We not only need the payee or customer, the reference of who we're paying or getting money from, but also an account that QuickBooks needs to record to. So we're going to make sure that we pick that up. We then have the memo if needed right here. So we're going to go ahead and put this information in here. Now, when we go here, it's going to try to guess what the first check number is. Now, typically, if we have a new checkbook or something, it's probably going to be like 101 or something like that. But we'd have to put the first check number in, and then it would number automatically from that point forward. I'm going to first select the date. We're going to say that the date of this deposit is going to be 01. We're going to put it in 0110. And then 2021, so 01/10/21. We're going to get that from our PDF file, so this is just going to be from the directions on the PDF file. When you select the tab, it'll go to the next item here. Now, because I don't want a check number at all, and this is actually a deposit, I actually delete the check number, and I just usually put a reference as a deposit here. Then the payee, there is no payee. We're the ones going to put the information in. So we could put owner or something like that. I'm actually going to leave it blank at this point. And we want to make sure that we're in the deposit section. So we're on the deposit side, not the payment side. Within the deposit side, we're going to enter $65,000. And that's how much we're going to put in as the owner. Next item, we're going to have the account here. So this is going to be the account. Now the owner is the one putting the money in. So it's not going to, usually when we get a deposit, later on it's going to be hopefully revenue from a customer. We cannot put it to an income statement account. We're not going to put it to income or expenses. What we're going to do is put it into some type of equity account, an investment. We may set up another investment account, but typically we just put it into the equity account. Our equity account, if we scroll up, we'll see the type of accounts on the right-hand side. And the equity account we're looking for is going to be that owner equity account. So we're going to actually post it to the owner equity account there. And note, it doesn't record. Now, I'm not going to put we could put a memo, say the owner investment. Note that it's not going to record here until we hit enter or return or select record down here. So if you were to leave right now, it would not have recorded. So I'm going to select enter, and it's going to say, are you sure you want to record it to this equity account? Because that's a bit of a rare type of transaction, doesn't happen all the time. We're going to say, okay, that's what we want to have happened. and then it says it goes, and it's going to click that. Once it goes down to the next line, that's when we know it has been completed. If you got the sound on, then it usually has a little sound too as well, which will indicate that it has been completed. Next, we're going to do a loan. So we're going to do a similar type of transaction for a loan amount, and we're going to say that that's going to happen on the same date. It's also going to be not a check number, so we don't want the 1, we want a deposit. And then we're going to put the bank name here. We're going to say Chase is who we're going to receive this loan from, Chase Bank, and we're going to say tab. And it says we're going to have to set something up. This name is not found. We're going to set it up. Now, we're not going to do the full setup. We're going to do a quick setup here. So I'm going to say I want to do a quick add. And then it's going to ask, are we talking about a vendor, an employee, a customer, or other? We're not really talking about a vendor or a customer or employee. So we'll put it into other because we're taking a loan out. Vendor is kind of the closest one, but that would be dealing with people that we buy stuff from, and we're taking a loan here, so not really the same thing. Make sure that we're going over to the deposit, not the payment side. So we are over here within the deposit side, and the loan that we will be taking out is the $50,000. So there's the $50,000 loan. We're going to select tab. Then we need the account, and we may have the loan account set up already. If not, then we would have to set up a new account. I'm going to try to type in loan. So there we have it. It's going to say loan payable. I'm going to say tab. If we had not set that up, then we can type in loan payable. And when we select tab, it'll say we don't have that account. Do you want to set it up? And I would typically set it up as an other current liability account, and then just set up the loan payable account. Just make sure you have the right account type. Then we're going to say we take out a loan. Is going to be, I'll put for the memo here, and then I'm going to say tab. Make sure that it's not going to enter anything until we hit enter or until we hit tab. So I'm going to say tab, and then there we have that information. Now we can check on this and see if it does what we think it should do. What should it do? It should at least increase the checking account on our financial statements in some way. So let's go to our financial statement, the main financial statement, the balance sheet, and go to reports and scroll down. We're going to go to the company financials. We're looking for the balance sheet. So I'm going to scroll over to the right, scroll down to the balance sheet, and there we have it. We're going to change the dates to 12/31/21 this time. I'm going to go to the end of the current year that we're going to be working on. And we see the checking account balance now has a 140. If we want to see the detail within that checking account balance, we can use the zoom in feature. We're going to double click on it to see the zoom in feature. And here is going to be that activity. Note that because the balance sheet is as of a point in time, when we go in and see the detail in the transaction by account, which is kind of like the general ledger account, we only see one day here. And what we really want to see is the entire year. So we're going to select tab and put 01/01/21. And then see the activity that has then happened. And that activity then includes the beginning balance of 25. That's what we had in there before we started this. And then we had the 65,000 here that we just put in place. I'm going to extend the memo, and that's from the owner investment. The other side of it, you can see went split. That means the other account that it is going to is the owner's equity. And then we see the 50,000 in the deposit. The other side it's going to is loan. If we want to see those, then we can close this out. And I'm going to say, no, don't show me that again. And then we're going to say, scroll back down, and we say the loan payable is here. So if we want to see the activity, I can double click on that. And I'm going to change the date again to 01/01/21. And we can see there's the Chase loan, the other side, the checking account. So there's always going to be those two accounts that are impacted when we do these transactions. It's a good idea to go to the financial statements, jump back and forth, and see what's happening, see what QuickBooks is doing. Even if we don't fully understand the debits and credits, we should kind of see how this whole balancing thing works, and that's one way you can get a better understanding of how these things are tying together. I'm going to go ahead and close that out. The last one set up the other side was going to the equity section, so that's going to be here. Let's double click on that. I'm going to change the first date, 01/01/21. And there we have this amount here. That's from the owner investment, increasing the equity section, increasing the net value of the company, increasing the amount owed to the owner of that 65. If we wanted to drill down on this, then we can kind of see the transaction. Note if I double click on these, it doesn't take me to the check register, but to a form, which is what QuickBooks is gonna use to drive their transaction. So even though we're entering this information into the check register, QuickBooks still generates, in this case, a transfer funds form. So I'm going to go ahead and close this back out, So that's the effect on the balance sheet of the deposit from both a loan and the owner deposit within QuickBooks Program 2018.